Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the boys from Convoy Home Loans, Jonathan and Dustin. How you guys doing?
Amazing. How are you?
I'm doing well. I have to ask you a question. This is a question I would ask you because we're friends, but now I'm going to record it so other people can see it. The 10-year note, like 3 days ago, was roughly 4.3%. I just looked and it's sub four. What the hell is going on? What are people in your industry saying? Because you're dealing at a level that I can only imagine. What are people? I mean, that is but the 10-year is not supposed to move like this, up or down. What are people saying? What's going on?
Obviously, everybody over the last year or so has been trying to make their predictions and where rates are headed and when they think rates are gonna, turn around or pivot. The main thing that I'm seeing is I've kind of come to a senses myself where I felt better predicting the market 3 months ago, 6 months ago, 9 months ago. At this point, it's the main thing that I've switched in terms of my advice to clients is, look, the second we get docs in right now, the second that we begin working on your loan, whether you like the rate or hate the rate, we're locking it. Even if you hate it, it's not worth the risk right now because the upside, even though, and this is still my opinion, I think there's a much higher chance in terms of the risk reward level that rates will stop and go down rather than get to 11, 12. I think double digits is still there, but it's one of those things where I think anybody that's predicting the market right now just needs to stop and wait and see if, the Feds do stop in February. That's my goal or hope.
Yeah.
I mean,
Jonathan,
the non-QM market hasn't moved down at all, right? Non-QM market has moved up and up and up, right? We saw two increases basically last week in 48 hours. They're like sneaking it in there. And we saw another one come out yesterday, which is, it's kind of, that tells you that, Wall Street sees something, right? And they expect rates to keep going up. This is kind of like what happened when back in June, I think June or July, when there was a dip, like a rapid dip, and then you caught a little bit of a wind and then it just went back up, and non-QM during that whole time was increasing. It's the same deal that's kind of happening here. And QM wise, even on conforming loans, conventional FHA, the lenders aren't passing on the gains as quickly as the market is giving it. So yes, we dropped, we're at like below 4 now, but that doesn't mean that the rates dropped like, that much to make it worth like, oh, we're going to roll the dice and it's probably going to go down lower. Like if any mortgage person tells you, let's just roll the dice, it's going to go down lower, but
run.
You should be a little weird. Yeah, exactly.
Run.
Exactly. And it's just not worth it. And especially if they're a broker, because they have a bunch of different, options, and they can always move lenders. Why are you even gambling? Right? It's not worth it. You're gonna lose. The market's the house right now.
Yeah, no. Yeah, Jonathan, you brought up a great point. I remember us, and people can go back and look at your playlist. We were talking in June where the I don't know, conventional market, right? The home loan market, home buyers, they saw a big rate reduction. I remember, I think it was you that talked about the margin, right? There was a time non-QM and, owner occ loans were pretty close, maybe a quarter, a half. Then they got over a point and you're like, it's going to come back. And I'm like, it did. Right. So right now we're kind of seeing that big gap as well. I think, we're going to see owner occ loans sub 7%. Probably, if not today, probably Monday. I can't believe the 10 years down so far.
Yeah. I mean, these moves are kind of something we've been feeling over the whole year. So we're kind of jaded, right? We don't feel pain. It's like you stab us, you're like, whatever, you pull it out and you're like, keep going.
Well, they'll hit us again next week.
Yeah, exactly. So, I mean, it's kind of, we are in a situation where the market is kind of, they'll do what it's going to do, right? And the deals they can't stop. The deals have to continue to run as long as they're great deals. And just quote them higher and just write them in your formula higher. And then, you're going to be fine no matter what the market's doing.
Yeah, I think that's very wise advice. Folks, again, investors, your time is now. Do the work. Motivated sellers are showing up. I got my first MLS deal in over 3 years done. I'm getting excited for what's coming because I've always wanted less competition. I hate it when anybody and their brother can get a high leverage loan. I like it when there's no lending and no competition. That's always good for me. So if people out there want to do some loans, one of the products we talked about today, sub 6, actually both products sub 6, how would they reach out to you guys?
Email private client at convoyhomeloans.com.
All right. Any other closing thoughts as we wrap this one up?
No, I think just right now is the time to be conservative in terms of writing deals, right? So
I think so too.
Yeah, so if you're gonna underwrite and you're like, hey, does this deal make sense or not? I mean, even if we're talking about like sub 6, like don't quote the deal at sub 6 because
no, write it higher. Yes.
Yeah, you should probably run it at like 8, 8.5, wherever even if maybe even 9, just to be as conservative as possible, because if it's gonna work at 9, it's gonna work at 6, gonna work at 7, 8. So just be conservative with how you're kind of quoting and writing deals right now, just because of the market situation.
I like that idea. Write them at 9 again, and then be surprised to the upside. And again, buyers have all the power today. The market changed quickly. Again, I like seller financing coming, creative financing, but there will be some sellers like the one I bumped into that just wanted out and gave me a stupid low price. So I'll pay cash and then I'll figure out what I want to do after that as far as going back and get some of the equity. So Convoy Home Loans is the place to go. One more time, how do they reach out?
Private client at convoyhomeloans.com, and let us know you're from where at. I saw Dustin's lips quiver a little bit, and I was like, I gotta say it right now.
He's gonna jump in.
Get it out.
Become our email notification guy.
Oh, there you go. Thanks, guys. Oh, go ahead.
Running the number, it's on the investment loans, the ones that we're doing, run it so that you're at 1.25. Give yourself some cushion. Run it so you're at just 1, because that's what we're telling you to get the best rate. Run it at 1.2, 1.25, because
I agree.
The product we spoke about on video too, that you can go back to when this is posted. Even though we can go up to high leverage, it's not going to work unless it's at 1.25. You got to be at 1.25. That's what's going to tell us that you can get high leverage. So keep that in mind, because it's not something that in this market you really want to be doing anything skinny.
Yeah, today's not the day to stretch. Right? Don't beat up your spreadsheet to get a skinnier deal. Just get a better price, get a better deal, or just move on to the next one. There will be plenty of opportunities. I look for 1,000 days in a row between deals. So if I can do it, you can do it too. Guys, thank you so much.
All right.